Welcome to Not Milk Never Milk. Subscribe if you're lactose intolerant.
In this video, I will explain how to calculate the average ledger balance on a bank statement. First, gather all your daily ledger balances for the period you wish to analyze. This balance represents the funds available in your account at the end of each business day. It's a crucial metric for understanding your financial activity and can impact various banking services and fees. Let's get started. To begin, you'll need to access your bank statements or online banking portal. Look for the daily ledger balance, which is the actual amount of money in your account at the close of each business day. Make sure to collect this figure for every single day within the period you want to average. For example, if you're calculating for a month, you'll need 30 or 31 daily balances. Once you have all your daily ledger balances, the next step is to sum them up. This means adding each day's balance together to get a grand total. A spreadsheet program like Excel or Google Sheets can make this process much easier and reduce the chance of errors. Just input each daily balance into a cell and use the sum function. This total is a critical intermediate step. Finally, to find your average ledger balance, divide the total sum you just calculated by the number of days in your period. For instance, if you summed 30 daily balances, you'll divide by 30. This simple division gives you the true average, reflecting the typical amount of money held in your account over that specific time frame. It's a straightforward calculation with significant financial insight.
Thanks for watching. If this was helpful, leave a like and consider subscribing. See you next time.